Something interesting that I noticed at work today, if you are a limited company business owner. Let's have a look. So extracting from a company when I'm a limited company business owner, I've essentially got three options. Either a salary payment to myself personally, which is subject to income tax rates at 20%, 40%, 45%, and obviously national insurance, which will be 6% if a basic rate taxpayer and 2% when your income is above 50,270. The key thing is you do get a corporate tax deduction, so you have to factor that into your analysis. You can also pay yourself a dividend. Now, you don't get the corporate tax deduction for a dividend, but the personal tax rates are slightly lower, 10.75%, 35.75%, and 39.35%. Now, when you're doing the comparison, you want to remember that if you do pay a salary, if you are the business owner, you will get that corporate tax deduction. And if you do pay a dividend, you won't. So you've got to add on whatever your marginal corporation tax rate, and that will be somewhere between 19% and 25%. You can pay yourself as a director's loan, but if that is outstanding at year end and 9 months passes, you have a section 455 charge, which is 33.75% on top of your corporation tax charge. So yeah, you do want to avoid that director's loan and make sure you're paying out your dividends. Even if you left your director's loan there and kept paying the section 455 charge, HMRC would charge interest on that as well. So, and that actually would be a benefit in kind for you personally, which is always something to avoid. There is a fourth way you could extract from your company, and that would be by paying another company that you control. Now, that wouldn't be getting the money into your name personally, but you could get the money out and into another company that you control. You could have that company control this company potentially and pay it up as a dividend. Dividends between companies are tax free, but ultimately, when you do get it out of this company, you are going to have to think about these charges personally, but you could get funds into a separate entity that you control. You could also invoice your trading company or another company for the services that you provide through this other company that you control. So it's another way of extracting funds from a UK entity and to another company that you control. So reasons you might want to do that are maybe this company is an overseas entity that is paying a lower tax rate, or this company has other shareholders in it, and you just want more control over how you're going to extract it, or when you're going to pay yourself a salary or a dividend, and you want that in your own name that you control. If you've got any questions, do reach out. If you do pay to another company, you will want to make sure you've got a clear audit trail and invoices between the two entities. Any questions, you can set up a free call with us here at SC Tax.